going to discuss one of the most important aspects in your syllabus, which is regarding the adjustments for property, plant and equipment. When we are considering about the property, plant and equipment, in level 1, you have learned some basic concepts regarding property, plant and equipment. As an example, you have learned what you mean by property, plant and equipment, what are the features of property, plant and equipment, and the depreciation of property, plant and equipment. Right. So, in level 2, we are going to carry forward this discussion towards another extent. So in here, in your level 2, we are going to discuss how to capitalize some of the cost items into the cost of the relevant property, plant and equipment, or in other words, to determine the cost of the property, plant and equipment. And then we are going to discuss regarding the modifications and upgrades of property, plant and equipment. We say the subsequent upgrades or subsequent modifications for the property, plant and equipment, and then how does it affect to the depreciation figure of the relevant asset. Then after, we are going to discuss the disposal of PPE, how to account for the disposal of PPE. Right. So this is the roadmap of the today's session. So first of all, we are going to start up with the initial recognition or initial identification of property, plant and equipment, or else how to determine the cost of a relevant PPE item. Right. When you are discussing about the property, plant and equipment, sometimes in your first level you may have some trial balances and balance sheets. You may find items called non-current assets. Under non-current assets, you may find land, building, motor vehicles, machineries, equipment, instruments likewise. So in there, you may find a figure called the cost of the item. So how to derive that cost? That's our main focus today. How to derive or how to decide the cost of the relevant asset. Right. So I'll take one example to discuss about this cost determination of property, plant and equipment. Assume that now I'm going to buy machinery from Japan. Now I'm going to import that machinery from Japan. So when I'm importing that machinery, I have to pay some price to the supplier of that machinery. Right. Sometimes there may be listed price of that machine, or we say mark price. From that mark price, usually suppliers are giving us some discounts. So the purchase price, and simply the purchase price of the asset becomes one of the main cost items of the cost of property, plant and equipment. But is that only the purchase price? In other words, purchase price is the purchase price the only item included in the cost of that particular asset? No. So what is the criteria that you have to consider here? The criteria is we have to consider all the cost items that you have incurred from the point of purchase up to the point where the relevant asset takes into the usable condition. So we have to consider all the cost items that you have incurred from the point of purchase to the point where we are having the ability to use that particular PPE item. So let's assume that I have purchased that machine from Japan. I have paid the purchase price. Let's say we made an online purchase. So I have transferred money. Then just purchase doesn't mean that I can use it. I can use that machine. Why? Still that machine is there in Japan. So I have to take that machine into my country. So I have to incur some other additional cost. As an example, shipping cost. So I have to incur that cost. Sometimes purchase price includes the shipping price, but in usual case we have to pay the shipping price as well. Then okay, I have paid the shipping price. We say CIF, cost, insurance and freight. CIF, cost, insurance and freight. Then now those machines are there in the harbor, dockyard. So now I have to clear the items from the harbor. So for that I have to pay some tariff, or we say taxes. I have to pay some taxes in order to release that machine. Then okay, now I have released that from the harbor. Then from harbor to my factory, I have to transport that machine. For that I have to incur another transportation cost. Right. Now the machine is there in my factory, but still I can't use that machine. Why? First I need to, so for some machines we need to prepare the site, so we have to incur site preparation cost. As an example, for some machines we have to have some specific particular area in order to operate machine. So for that I had to clear some area, I had to prepare some space for that. We termed it as site preparation cost. Then I have to fix the machine. For that I have to incur fixing cost. Right, now I have fixed it. Then sometimes for some assets, some PP items, we have to incur some legal cost as well. In order to use that, we have to have some legal procedures are there, so we have to adhere them. So for that I have to incur legal cost. Then after the legal cost, we are usually doing a trial run or test run. For that we have to incur some cost. So we say testing cost for testing cost. Okay. Now see, after the testing I can use the machine. Then I can use the machine for my production. Now see, from the point of purchase to the point where the relevant PP item, in here the machine, takes into the usable condition, all the cost items we have to consider. Purchase price, shipping cost, tariffs, transportation cost, site preparation cost, fixing cost, legal cost, testing cost, etc. There may be some other additional cost as well. But the most important thing in here is you have to incur, or you have to consider, or you have to include only the cost items where it should be a necessary or compulsory cost item in order to operate the machine, in order to use the PPE item. It means that there are some costs we are incurring before the usual production or before the usage, but we cannot capitalize them. So what are the examples? Right. Okay, as an example, let's take in a hospital, now they are going to purchase, let's say, CT scan machine. Right. So for CT scan machine, so usually they have to incur almost all the cost items here, right? Purchase price, shipping cost, tariff, transportation cost, site preparation. Yes, you have to have some specific area, another room for that. Then fixing cost, yes, there may be legal cost and necessarily the testing cost as well. Right. Then after doing all of them, before opening that specific unit, let's say before the usage of that CT scan machine, now that hospital is advertising about this machine. They say now we are having these CT scan facilities as well. So you have to incur some significant amount for that as well. Right. I'm going to include that cost item into here. That means I'm going to take that item as the cost of that machine for the CT scan machine. No, why? It's not a compulsory cost item. You can even use that CT scan, that machine, without doing any advertising, without having the publicity. You can easily use that machine, right? Therefore, it's not a compulsory cost item. Therefore, you cannot include that in here. Another example. So let's say a building, right? After constructing the building, now you are having an opening ceremony for that building, right? So you have to incur some significant cost, some significant amount for that opening ceremony. Are you going to include that cost of the opening ceremony into the cost of the building? No. Why? You can easily use the building without incurring that cost for the opening ceremony. It's an additional cost, right? So such items you are not going to include. Right? Therefore, you have to carefully look at each item when you are recognizing the cost of the PPE item, right? So the cost comprises with let's say cost of machinery item, includes all of them, not just the purchase price, but the addition of all the other cost items that the relevant PP item take into the usable condition, right? So you have to be very careful about the breakdown of the cost, right? So now we are going to apply this knowledge into an exam question in your paper, in your level, right? For that I have selected one question which is 2015 July. So in 2015 July paper, there's one question regarding this. Actually, at the moment we cannot do the whole question. There are some additions that we have to discuss, but there's one part from this knowledge, right? You can easily apply this knowledge, right? Let's see what does that question says. On 1st April 2010, Ken Private Limited acquired a machinery under the following terms. Listed price 1,250. I'm saying about the thousands, the figures in thousands. Transport cost 55, electrical installation cost 25, pre-production testing cost 20,000. Right. Then trade discount on listed price is 20%. So listed price is there 1,250. Out of that we are getting a trade discount of 20%. So you have to take the net amount as the purchase price. It was estimated that the useful life of the machinery is 8 years and the residual value at the end of year 8 is 20,000 rupees. The company depreciates its machinery on straight line basis at cost. Right. Let's ignore the next part because we cannot do that at the moment. So part A says you are required to calculate the carrying value of the machinery as at 31st March 2014. They are asking about the carrying value of the machinery as at 31st March 2014. Right. Before you are going towards the the carrying value, first you have to identify the cost at the purchase date, or not actually the purchase date, cost of the machinery whenever it is available for use. Right. So let's take one by one. So you are having 4 cost items. You have to consider whether we are going to include them or not. Right. First one. So they say listed price, but we are not going to take the listed price. We are taking the purchase price. So we say purchase price. Listed price is 1,250. You are getting 20% credit discount. That means you have to pay only 80%. That means your purchase price is 1000 rupees in thousands. So the purchase price of the machinery is 1000. Transport cost, yes, obviously you have to include that. Transport cost 55. Electrical installation cost. Installation cost 25. Yes, you have to incur that 25. Pre-production testing cost. Yes, you have to incur that cost as well. Testing cost. It's 20. Right. So, total of purchase price, transport cost, installation cost, and the testing cost. Comprise the cost of the machinery. Therefore, we can say cost of machinery as at 1st April 2010. That means the purchase date. Let's assume from at the date of purchase we can use this machinery from that day onwards. Therefore, the cost of the machinery is 1100. Cost of the machinery as at 1st 4 2010. That means the purchase date. But the question asking not for the cost of the machinery, they are asking for the carrying value of the machinery as at 31st March 2014. After 4 years, what's the carrying value? So in order to find the carrying value, now you know you have to deduct the accumulated depreciation for the whole 4 years. Accumulated depreciation for the whole 4 years. Right. So how to calculate the accumulated depreciation for the 4 years? Right. Now you know to calculate the depreciation in straight line method. Cost, it is 1100 minus scrap value which is 20,000, or the residual value 20,000, divide by useful lifetime which is 8. So by solving this we can find the annual depreciation for this particular machine. But we don't need just the annual depreciation, we need the accumulated depreciation for the 4 years. That means from 1st 4 2010 to 31st March 2014, exactly 4 years. Therefore, you have to multiply this by 4. Right. By solving this, you can find out that the accumulated depreciation is 540. Right. Now you have the cost, accumulated depreciation for the 4 years. Then you can find the carrying value as at 31st 3 2014. Carrying value as at 31st 3 2014. So the carrying value is 560. So that's the requirement. That's the exam requirement to calculate the carrying value as at 31st 3 2014. Right. So you should have the ability to decide the cost of PPE. So what are the items that you have to include into the cost of PPE? Right. So in past examination questions, you may find another like 2-3 questions regarding this in the previous syllabus. So this is a very common question. So you can practice them by yourself. Right. So I think from this question, you are having a crystal clear understanding about the way to calculate the cost of PPE. So our learning is up to this point. The next part, the calculation of depreciation and the carrying value, is from the level 1. Right. So this is the first half of the today's discussion, to decide the cost of PPE. Right. Then let's move on to the next part of the discussion which is regarding the modifications and upgrades of PPE. Right. So in this question you are having part B regarding that, but before we are moving into the question, let's discuss about this process. Right. So you know that, okay, you know the cost. Now you know the cost of the PP, let's say machinery, because in this example we are having a machinery. So now you know how to calculate the cost of the machine. Right. Now you know the cost. Right. Usually for property plant and equipment, annually we are doing some maintenance works, or we are incurring some maintenance cost or maintenance expenses on this PP items. So what's the purpose of incurring annual maintenance cost on the PP? The main reason is to maintain or to carry out the relevant item in the usable condition. So we know that we are using this machine every day, so it subjects to wearing and tearing. So that's what we are called as depreciation. So we know that with the time the value of the machinery is gradually decreasing. Why? Now it's wearing and tearing. Now it's not that productive as the new machine. After let's say it's up 2 years, it's not that productive as the brand new machine. But in order to maintain that machine in the usable condition, or else we can say to take that machine into the normal condition, annually we have to do some maintenance cost. For a motor vehicle, we have to incur the service cost. So we have to service the motor vehicles. Likewise, for each and every PP, so most of the PP items, excluding land, we have to incur maintenance cost. Right. So what's the accounting treatment, or simply the double entry for maintenance expenses of property, plant and equipment? In level 1 we have learned this. You know that we say it's a revenue expenditure. We can easily write off that item as an expense in the income statement. We can easily write off that maintenance expense in income statement as the maintenance cost. You are not going to capitalize that maintenance cost. So what do you mean by capitalizing? You are not going to include that item into the cost. Clear? Right. So you know the double entry. It's very easy. Maintenance expense, or let's say machinery maintenance expense debit and cash credit. So I can represent that story regarding small diagram. So I would say, so this is the level of usage, or let's say the level of value of that machine. Right. When you are using the machine, what's happening? Gradually the value decreases. In order to take the machine into the normal condition, we have to incur maintenance cost. And we are now taking that machine into the normal condition again. Then again you are using the machine, then value decreases, again you are incurring some maintenance cost, then you can maintain the value of the relevant item. Right. So now you can see the purpose of maintenance cost. So this is the maintenance cost. Maintenance cost. Right. So the main purpose of maintenance cost is to take the machine or take the relevant property, plant and equipment to the normal condition. But there are some other expenses, we would say incurring some expenses where the value upgrades. Now we are taking the machine into another level. Value has enhanced, not just maintaining the asset, but an enhancement, right? An enhancement. So we say this is a modification. Or an upgrade. Then due to the modification or the upgrade, what's happening? Now the value is in an upper level, a higher level. As an example, let's say this building. I'm renting out this building for the classes, right? So I have built this machine like let's say 10 years back. Now I'm renting out this building for classrooms, for tuition. Now I'm going to do some major modification or an upgrade to air condition all the classrooms. And let's say the roof of the building is not in good condition. Now I'm going to replace that roof with a new one. Right. So it's not just an annual maintenance cost, So annual maintenance cost may be the painting, the color washing, likewise. So they are like annual ones. So you have, in order to maintain the building in the normal usage condition or the usable condition, you have to incur that type of cost. But the air conditioning and fixing a new roof, we can consider them as modifications, so upgrades. So what's the end result of that modification or the upgrade? One is the useful life of that building is now increased. Why? Due to the new roof, the lifetime of the building is now enhanced. The survival is ensured. Let's say before the modification, remaining useful lifetime was there for another 5 years, but due to the upgrade, now it's 8 years. It has increased by 3 years now. And also, I can earn more income. Why? Due to the air conditioned rooms. Right? I can charge more rates from AC rooms than the previous non-AC rooms. So now you can see that due to the modifications and upgrades, in one hand your cost may reduce, on the other hand your revenue may increase, your productivity may increase, your efficiency may increase, your useful lifetime may increase. Either one of those things. If something is happening like that, we say it's a modification or an upgrade. So what's the accounting treatment for the modifications and upgrades? Simply you have to capitalize them. So what do you mean by capitalizing? Capitalizing means you have to include this cost or the expense into the cost of the relevant PPE item. You are not going to just write off in the income statement. Now you are capitalizing that amount. The double entries, let's say machinery account debit, cash credit. Now it's an asset, not a mere expense. Right. Okay. So if we take the maintenance cost, we know that we are charging them in the P&L, profit and loss. The accounting treatment is very easy. But if there's a modification, we have to capitalize. Due to the capitalization, we assume that now this The relevant machine is like a new machine. Like a new machine. Now an upgrade has happened. So it's a new machine. Due to that, it affects for the depreciation after this modification or after the upgrade or after the fixing of new item for the machine. Anything. So when you are calculating the depreciation after the modification, now it affects. So how does it affect? Now we are going to discuss that part using the part B of this question. Right. Let's read the question carefully and try to understand this. On 1st April 2014, Ken Private Limited decides to upgrade the machinery by adding new components at a cost of 200,000 rupees. This upgrade led to a reduction in the production time per unit of the goods manufactured using this machinery. Due to upgrade, the remaining useful life of the machinery has increased to 5 years, right? While the residual value remains the same. Now they are asking the depreciation of the machinery for the year ended 31st March 2015. That means what's the annual depreciation after the upgrade? Now you have already calculated the depreciation before the upgrade. We took the accumulated depreciation figure, but you can easily find the annual depreciation figure as well. Now again they are asking after the upgrade, what's the depreciation value? Right. So if you are calculating the depreciation, after an upgrade or modification, or simply after the capitalization, we say after subsequent capitalization of some cost items, you have to modify your equation for the depreciation. So what's your usual equation for the depreciation? Cost minus scrap value or the residual value divided by useful lifetime. Yes, it's the same equation, but you have to modify that. Right. Now we are going to calculate the depreciation after upgrade, or let's say for the year ended 31st/3/2014. Right. Okay. So now you have to take first of all the initial cost. Let's say initial cost of the machine. Then you have to deduct the accumulated depreciation for this particular item of PPE from the date of purchase up to the date of upgrade for the whole period. That means up to the date of upgrade, you have to deduct the total depreciation amount. That means this part is the carrying value at the date of upgrade. So at the date of upgrade, this is the carrying value. Then for that amount, you have to add the upgrade cost, or the amount that you are going to capitalize. Right. That means this is like the new cost of the machine, new cost of the upgraded machine. So why we are going to deduct the accumulated depreciation? Now we are assuming that this is like a new piece of machinery. Therefore, we have to take the carrying value of the machine. That means the remaining value of the machine. That's the rationale behind that. For that, we have to add the cost that we have incurred for the upgrades. Right. Then from that total amount, you have to deduct the scrap value. or the salvage value or the remaining value or whatever it is. So sometimes due to the upgrades, your salvage amount or the salvage value or the scrap value may affect. If it is the case, you have to say it's the new scrap value. It's a new scrap value. But in this case, they say the residual value or the scrap value doesn't affect. Right? Therefore, you can use the available scrap value as it is. But if there's a new scrap value, you can use that. Then divided by the remaining useful lifetime. Remaining useful lifetime. Not just the useful lifetime, the remaining amount after the upgrade. Right? Okay. Now we can apply figures to this equation. Okay. Initial cost we have calculated, it's 1100. Accumulated depreciation up to the date of upgrade. Up to the date of upgrade, we have calculated. The first part, it's 540. So we can take one figure for this, which is the carrying value. That means the answer of the part A, which is 560. Right? So you can easily break this up. That means 1100 minus 540. Right? The answer of the previous question, that means part A. For that we have to add the upgrade cost, which is 200,000. Then from that we have to deduct the scrap value. So if there's a new scrap value, you can apply that. But in here they say residual value remains same. So the residual value is just 20,000. Right. Divide by remaining useful lifetime. So the initial useful lifetime of this machine is 8 years. Then we have used this machine for 4 years. Therefore, remaining useful lifetime should be 4 years. But due to this upgrade, what's happening? They say due to the upgrade, the remaining useful life of the machinery has increased to 5 years. Now it has increased to 5 years. Therefore, remaining useful lifetime is not just 4 years, it's 5 years. So in here you have to be very careful about the wordings of the question. Why? In here they say the remaining useful life of the machinery has increased to 5 years. Therefore, your useful lifetime should be 5. If they say increase by 5 years, means addition to the existing remaining useful lifetime. That means existing useful lifetime is 4 years at the moment. If it is increased by another 5 means, then it should be 9. But in here they say increase to 5 years. Therefore, remaining useful lifetime is 5. So you have to be very careful about the wordings of the question. Right. Now it's just a matter of solving this simple equation where you can find out easily the depreciation after the upgrade, which is 148. So now you can see that after an upgrade or after modification, your depreciation amount is also changing. So this is one specific area where the examiner can test your knowledge on this. Right? So there are another questions in past examination papers, so you can try them out by yourself. You can easily apply the knowledge that you have gathered here. They are very straightforward as this question. So always keep in your mind the points that you have discussed: how to calculate the cost of the PPE, then how to recognize or how to distinguish between the maintenance cost and the upgrade cost. Then if there's an upgrade, how to calculate the depreciation after the upgrade. It may be upgrade, it may be either modification or adding some other items to the relevant property, plant and equipment. Right. So I hope you have gained a clear understanding about this part. Right. So last part of this session is about the disposal of property, plant and equipment. The disposal of property, plant and equipment. So let's discuss that to another question. Right. So when we are coming to the disposal of property, plant and equipment, first of all you have to understand this term of disposal. So what do you mean by the disposal? In most of the cases you may misunderstand that disposal is just selling of property, plant and equipment. Yes, selling is one of the major component of disposal, but selling is not the disposal, or else disposal is not just selling. You can either exchange your property, plant and equipment with others, or else you can either destroy your PP items if required. So whatever it is. So when you are discussing about the definition of asset, they say you are having the controllability of that asset. Therefore you can control the relevant item, the relevant PP item at your own wish. Right. So in here we are going to discuss about this disposal. In most of the cases, yes, it's like the selling, but there are some items, but there are some other ways where disposal can happen. Right. So when you are doing the accounting for the disposal, there are a few steps that you have to follow. Basically like 4 steps you have to follow. By following those 4 steps, you can easily find out the profit or loss of the disposal. Right. So when we are discussing about the steps, the first step is you have to remove the cost of the item or cost of the disposed item. Therefore, first one you have to remove the cost of PPE or else the disposing item. So let's take an example. We are going to dispose a machinery. Therefore, when you are removing the cost of the PPE or cost of the machinery, you have to credit the machine account. Why? Usually machineries are having debit balance as an asset, debit balance. Now you have to deduct the value of the machinery. Therefore, machine account you have to credit. Then where the relevant debit entry goes? For that we are preparing a temporary account called disposal account. We say machinery disposal account, motor vehicle disposal account. So what's the purpose of preparing this disposal account? You have to find out the profit or loss from the disposal. Right. Therefore, in the accounting process for disposal, you should necessarily have this disposal account. Right. Let's see how to prepare the disposal account separately. Let's see what are the double entries which is relevant for the disposal. Right. So first you have to remove the cost of the relevant item. Therefore, let's say machinery account credit, machinery disposal account debit. For the easy case, I'll take motor vehicle. Motor vehicle disposal account debit, motor vehicle disposal account debit, motor vehicle account credit. Therefore, cost you have to reduce. The cost. Then you have to remove the accumulated depreciation of PPE. So what do you mean by the accumulated depreciation? This is very much important. You have to remove the total depreciation. You have to remove the total depreciation from the point of purchase, to the date of disposal. That means you have to deduct the depreciation from the date of purchase to date of disposal, right? So you know that accumulated depreciation is having a credit balance. Why? It shows the reduction of the asset value. So if you are going to remove that value, now you are removing the depreciation amount that you have already calculated. Therefore, accumulated depreciation or provision for depreciation account is now debit. It's not debit. Therefore, when you are removing the accumulated depreciation of the property, plant and equipment or the item that you are going to dispose, we say, let's take motor vehicle. Motor vehicle, provision for depreciation account, debit, relevant credit entry goes to motor vehicle disposal account. Motor vehicle disposal account. Right. So now you have removed the cost and you have removed the accumulated depreciation as well. Accumulated depreciation. So in the disposal account, debit side you have the cost, credit side you have the provision for depreciation or the accumulated depreciation amount. That means you are having the net value of PPE or the net value of the amount that the net value of the PPE item that you are going to dispose. Right. So third step is you are receiving cash for the disposal. So now you have to record that. Receiving cash for disposal. So you know that if you are receiving cash account debit. Relevant credit entry goes to disposal account. So it's not fair to say that third step is always receiving cash. Why? Always you are not receiving cash. Sometimes you are receiving another asset, another motor vehicle. So if you exchange motor vehicles, we are not receiving cash, we are receiving another motor vehicle. So therefore, double entry should be motor vehicle account debit, motor vehicle disposal account credit. So you have to be tricky in those situations, right? So final step is very easy. You have to identify, you have to record profit or loss from disposal. So I'm not going to write the double entry for that. Why? If there's a profit, we say profit is like an income. Therefore, P&L account or income statement credit. P&L account credit, disposal account debit. On the other hand, if there's a loss is like an expense. Therefore, profit and loss account debit, disposal account credit. So if you are preparing a disposal account, you can easily find out the profit or loss from the disposal. Right. Let's take a question and discuss it through the question. Right. For that I have selected one question which is there in July 2018 paper, question number 1.4. July 2018, question number 1, subpart 1.4. Right. It's an MCQ. They say the following information is extracted from the trial balance of B Limited as at 1st April 2017. Right. Motor vehicle cost amount is 5,000 rupees in thousands, purchased on 1st April 2014. Right. Then accumulated depreciation of the motor vehicle is 1,500. Useful lifetime of the motor vehicle is estimated to be 10 years. The company sold this motor vehicle for 3,231st March 2018. Then they ask him, based on the above information, profit or loss on the disposal of the motor vehicle would be. Right. So you have to easily apply the above 4 steps. That's it. Right. So I would say motor vehicle disposal account. Motor vehicle disposal account. Right. So first step, you have to remove the cost. Disposal account debit, motor vehicle account credit. Motor vehicle at cost amount is 5,000. Therefore, you have to debit the disposal account 5,000. The relevant credit entry is there in motor vehicle account. Very easy. Step number 2, you have to remove the accumulated depreciation or the total depreciation, but you have to be very careful. Why? You have to calculate the depreciation from the date of purchase to date of disposal. Right. So let's take, we have purchased this machine on 1st April 2014 and we are having the extract from the trial balance as at 1st April 2017. That means for the first 3 years, depreciation is there as 1,500. But we have to be very careful whether we are going to sell this particular motor vehicle on 1st April 2017. What about they say the company sold this motor vehicle for 3,200 on 31st March 2018. That means after another year. You cannot just say the accumulated depreciation is 1,500. Why? That amount is only for 3 years. That amount is only for 3 years. You have to calculate the depreciation for the year of 2017 and 18. That means for the last year. Therefore, you have to calculate the depreciation for the final year. Cost is 5,000. Depreciation policy is to depreciate on 10% on cost. Sorry, not 10%. Over 10 years. Whatever it is, both are same. Right? Therefore, annual depreciation is 500. Annual depreciation is 500. So that's why 1,500 is there in the trial balance. Why? From 2014 to 2017, there are 3 years. Each year 5,000. Therefore, for the first 3 years, accumulated depreciation is 1,500. But you have to transfer total amount from 1st April 2014 to 31st 3 2018. That means for the whole 4 years. You have to calculate depreciation for the whole 4 years. For the first 3 years, it's 1,500. For the final year, it's 500. Therefore, in total, depreciation is 2,000. So this is the tricky area. You cannot just take the amount. That's why, even though it says there are only 4 steps, there may be some additional steps as well to calculate the depreciation. Right. Now you are going to remove that amount 2,000 from the accumulated depreciation account. Accumulated depreciation of the provision for depreciation account debit, disposal account credit 2,000. Provision for depreciation. Right. First 2 steps are there. Okay. Third step, you have to record the cash that you are receiving. You are receiving 3,200. Therefore, cash debit, disposal account credit 3,200 cash. Right. Final step, you have to balance this account and you have to find the profit or loss. Right. It's very easy. Now we don't know whether there's a profit or loss. You have to just check the 2 sides, debit and credit. You have to decide which side is having the higher balance. So by looking at this, you can see credit side is having the higher value, which is 5,200. Right. That means you are having a profit of 200. Why I am saying it's profit of 200? Disposal account debit, profit and loss account credit. So profit and loss account credit means it says it's a profit. Right? Okay. So this is an MCQ. MCQ. So answer is answer number 1, profit of 200,000. Profit of 200,000. So you can easily find the figure even without ruling this disposal account by just looking at the cost is 5,000, provision for depreciation is 2,000, therefore the scrap value is 3,000. Sorry, the remaining value is 3,000, or the carrying value is 3,000, not the scrap value. Carrying value is 3,000. For an asset worth 3,000, we are receiving cash amount of 3,200. We are receiving 200 in excess. The amount we are receiving in excess is the profit. That's the profit, right? So the disposal is a very common question in your paper. Definitely there will be a question from the disposal. Sometimes it may be MCQ, or else it may be an adjustment for the company account. Right. So from that, I think this is about the disposal. There may be some other questions. Sometimes they may ask you to write the journal entries. Sometimes they may ask to write the double entries. Likewise, there may be different questions, but basic understanding is this. You need to understand the basic steps, the 4 steps. But again, I'm reminding you, there may be some additional calculations like this. Therefore, you have to be very careful about that as well. Right. So I think with that you have gained a proper understanding about to capitalize the cost of the PP items, then how to calculate the depreciation when there's an upgrade or modification for PPE, then finally how to account for the disposal, how to find out the profit or loss from disposal. Right. So hope it's very clear. Let's meet from another video. Thank you very much.